Good morning, everyone. Thanks for coming to today's webinar on hospitality and tourism sector. I'm Ron Wirtz. I'm Regional Outreach Director at the Federal Reserve Bank of Minneapolis. With the close of summer, we thought it was important and useful to take the pulse of the hospitality and tourism industry in Minnesota, and we're here to discuss the latest results of a quarterly business survey we do in this sector. But before I get started, there's a few housekeeping items that I'd just like to cover real quick. So today's webinar is actually part of a series of webinars on regional economic conditions. We'll post a link in the chat box where you can find some of our past webinars. We also have one that's coming up that we'd like you to maybe consider, and then we'll also be posting this one as well in that area of our website. So if you have any interest in maybe sharing this, you can find that there. I will be covering survey results in the first half of this webinar, probably go to about 9:25, 9:30. The second half of this webinar will feature a moderated Q&A with two of my partners in this survey, Gretchen Nussbaum of Explore Minnesota Tourism and Ben Wogsland of Hospitality Minnesota. I'll give you a little bit more information on that partnership in a second. I will be moderating that Q&A session and would love to get questions from the audience that I can pose to the panelists. At any point during this event, if you have a question, please type it in the chat box on Zoom. We're going to cover a lot of ground today, and I'll give you a lot of information and probably fairly quickly, maybe more quickly than you'd like. But we want to give you a lot of information, and the slides for this presentation and a copy of the video link are going to be emailed to all registered attendees next week, and we encourage you to share that with others. So lastly, we'd love to get your feedback at the end of this presentation. So if you would, after the event is over, we would appreciate if you would take a moment to fill out a really, I promise, only a 30-second survey that'll pop up in your Zoom window when you leave, just to give us a little bit of feedback. Okay, with that, let's turn to some featured content. So before I get started, I have to give you my disclaimer. So the views expressed here they are mine, not necessarily those of the Federal Reserve Bank of Minneapolis or the Federal Reserve System. So to give you a little bit of background here, today's focus, we do a lot of survey work at the Minneapolis Fed. This specific survey that we're doing is on tourism and the hospitality sector. So this is a quarterly survey that we do in partnership with Explore Minnesota Tourism and Hospitality Minnesota. This is actually a partnership that we established just before the pandemic. We've done almost 3 years worth of surveys, but this is actually our first joint webinar. So we're really pleased to be able to kind of do this in a more public fashion in terms of spreading some of the information that we got. In terms of this specific survey, we conducted it in mid-August, and we got 324 responses from Minnesota businesses, and that's actually a really nice increase from the survey that we did in May. So we're really happy with the survey results. And for any of you out there that may be one of those that took the survey, I just want to take say a quick thanks for doing the survey. It really provides both of our organizations with a lot of really important intelligence. And while I'm thinking of it, just a quick shout out to Hospitality Minnesota and Explore Minnesota. Great partners. This has just really been a win-win-win, I think, for all three of our organizations, but the Minneapolis Fed really values this partnership. So some quick takeaways, just so we can kind of get set some basis here. So what the survey tells me is that the recovery is continuing in this sector in general. Unfortunately, fewer than half are back to pre-pandemic levels. So I think all the survey tells us really some good and some bad, kind of in lots of different ways. In terms of the most improved, what we're seeing is that accommodation is probably leading some of the other subsectors, and I'll talk more about this. In terms of where we're seeing more recovery, we're seeing central and northeast Minnesota probably performing better than, say, the Twin Cities. They're still finding their way in the Twin Cities, and I'll be able to show you some information along that. Attraction and entertainment businesses also are probably lagging the rest of the group in terms of their overall recovery. The challenges, these are not new, but we're still seeing a lack of labor really be a problem, really be a challenge for businesses. Inflation obviously is also an important factor right now. Supply chain is still there. It seems to be improving a little bit. And then we also have this higher wage thing that is certainly good for workers, less good if you're the one running that business. Overall financial health, we're starting to get good information from a longitudinal standpoint, where we're starting to see that financial health improving, and or at least stabilizing in many ways. And to me, it really shows a lot of resilience in this sector as well. One thing I really want to note, so what you're going to hear in terms of the interpretation of the survey results, they're really from my point of view, from the Minneapolis Fed's point of view. The Q&A really is there, though, to give my other partners an opportunity to offer kind of some of their takes on what some of the data say. And I think it really helps to bring them in and maybe have a little bit different perspective, because it kind of helps everybody understand that there's no one way to read these survey results. But hopefully when you leave here, you can have a good understanding kind of from a full spectrum of perspectives. So let's start in with some of the data. So let's talk about recent revenue trends. So a couple of things just to orient how I present a lot of the data. So I do a lot of these types of bar graphs to kind of compare two things over time or to each other. How you read these is red means bad, green means good generally in most of these charts. So the quarterly revenue trends, we asked them to compare the recent quarter to two different periods. The same period last year, that's the bar on the top, and then compared to the same period in 2019, so pre-pandemic. And I think what you see generally is a good thing. Overall revenues are continuing to improve compared to both time periods. So both compared to last year, compared to 2019. What I would say is there's still an awful lot of lumpiness. So we're still seeing a lot of red, a lot of people that are not seeing positive revenue trends over either period, or maybe one or the other. So I would say it's a positive picture overall, but I wouldn't paint it excuse me, too optimistically. As I mentioned, we've been doing these surveys now for a considerable period of time, and some of the questions have changed over time, so they're not all comparable, but we do have this question in particular. So on a year-over-year basis, how have your revenues changed? So the first thing I would say about this is the pandemic has been very volatile. So year-over-year comparisons can be difficult. So I would take this with a little bit grain of salt, because you have different comparison periods when you do year-over-year. In general, what I would take from this chart is that I think revenue trends are improving slightly. I think more importantly, I think this shows that, especially in recent surveys, I think we're seeing some stability. So we're a little bit of that volatility is kind of going away as we I think get more used to kind of what the new normal is in the economy. We also ask businesses kind of a little bit more of a broad, excuse me, and kind of general idea of, tell us what your activity has been over the last 6 or 9 months, to get a little bit better idea of kind of the a little bit more of a general trend of how they're feeling about activity. And what this chart says to me is that if you look at the green, I consider most of those 3 responses in green as kind of positive, or at least acceptable. And 90% of respondents here reported that they either were seeing good or acceptable business activity so far this year, again, over the last 6 to 9 months. If you look at that, if you take that same chart over time, and again, I should have explained earlier, so you can see the dates that are on the left of this chart are the survey dates that we've done in the past. Okay, so this is over time. And what this chart here says, if you look at the very bottom, August 2022, you are seeing some year-over-year pullback, just a little bit in some ways if you compare it to the previous year. But again, there's a little bit of, you have to take that with a grain of salt, because we're talking about year-over-year comparisons that have been very volatile over the last 2 or 3 years. So I think with that in mind, I think overall, if you look at the last 3 again, I think this suggests to me that there's some stability that's developing within this particular sector. Now, stability is not necessarily all great if we're still, if we're still not seeing those with a lot of success getting back to 2019. Stability is not necessarily great. We'd hope to see stronger growth, but again, I think there's at least some utility to that stability coming in. So if we asked firms to give us a few traits that we can kind of splice and dice to get a little bit deeper look into who's performing well and where. So the first one is we asked them to identify into one of 3 groups. So allied and other businesses, and that would be those firms would be like suppliers, vendors, service providers, like sales brokers, things like that, who kind of help support those firms in this particular sector. Then you have attraction and entertainment, food, drink establishments, and overnight accommodation. So what these two charts are, so this is revenue compared to the same period last year on the left, and then compared to pre-pandemic on the right. And so in both cases, overnight accommodation is doing the best on these two comparisons, and in some cases by a reasonably good margin, actually. And then you have the attraction and allied businesses really seem to still be recovering from a pretty steep decline initially in the pandemic, and still kind of, I think, trying to get some stakes in the ground in terms of real traction to kind of getting back to where they were. I think one of the reasons that some of the attraction and entertainment businesses are struggling is, I think, especially in the metro, that's really where a lot of these businesses are centered. And as you can see here, there's kind of a good bad story with regards to what's happening in the metro right now. They have seen the best year-over-year performance, but over the last year. I think part of that, though, is because they've seen the most significant drop during the pandemic. So if you go to the chart on the right, they are still the ones that are lagging the most in terms of their revenue compared to 2019. So the good news is metro businesses are performing well over the last year. The bigger problem, the less good news is that they still have, I think, a fair amount to go in terms of full recovery from the pandemic itself. So let's talk a little bit about workforce and wage trends. So the good news here is that overall hiring demand is still really quite strong. So excuse me, this question asks what your overall hiring demand has been, the green bar being the past 3 months, and then the yellowish bar is over the coming 3 months. So we kind of want to know where things have been and where things are going, because the Federal Reserve Bank is obviously very interested and wants to track employment trends in general. And to me, this has a really almost nothing but a positive message. Almost 2/3 of the respondents said they were hiring in some capacity. Now, again, not everybody's going to be hiring to grow. A lot of them, a fair number, are hiring to replace turnover. Some are hiring seasonal staff, etc. But close to 40% say they were trying to expand full-time staff. That to me is a very positive and strong signal in terms of overall employment trends. Now, if you go to what are they predicting in the coming 3 months, if you look kind of in the middle, you see whether or not they're hiring more seasonal and year-round staff. Or hiring seasonal staff on the bottom, you do see a fairly significant pullback in the share that plan to hire more seasonal staff. That's to be expected. A lot of these businesses are seasonal only, so I think you should expect to see some of that pullback. What I would say is, if you look at the bars that suggest hiring more year-round staff, the second to the bottom one, there still really is a strong demand for full-time year-round staff. And I think that, again, is a very positive signal for the sector, for the economy. Over time, again, we're trying to figure out where direction is going. I would say, generally speaking, there's a pullback from May. I think, again, probably because in May, you're starting to see firms staff up. And then in August, a little pullback. But if you compare August to most of the other surveys, we're really seeing very steady kinds of patterns in the sector overall, and including with year-round and permanent staff, which, again, I think that's what we're looking for, is how volatile is it? To me, this suggests that the demand for labor has really been very persistent. The problem, I think, is most people listening here, all people listening here, is that labor availability has been much more difficult. This is not a new issue. I don't think I have to guess that it's probably going to be an issue that we're dealing with for some time. Right now, almost 80% of respondents say that labor is either extremely or moderately tight, and really it's kind of baked in the cake right now, unfortunately. The unavailability, if you kind of just generally look at the chart over time, yes, there are some small fluctuations, but generally speaking, kind of if you look at it as a whole, we're generally seeing labor availability. I don't want to say get worse, because it has actually improved from May to August, but again, it has done that on a couple of different occasions between these surveys, and generally speaking, there is not good labor availability. One of the things that I think firms have done very persistently because of that labor unavailability is that they've raised wages. Again, as I mentioned earlier, this is a good thing for workers, not necessarily a great thing for profit margins for business owners. And so we asked them to not only tell us about the previous 12 months of wage increases, we asked them to project out. And what we are seeing is that half have raised wages by more than 5%. That's a measure that the Federal Reserve would consider quite strong. The notable thing to me in this question is that the respondents expect wage pressure to ease fairly significantly. If you look at the dark green, which would be an increase of more than 5%, roughly only about a quarter expect an increase of 5%, whereas over the previous 12 months, it was over 5%. I'm not saying that's not going to happen, but what I would say is that that does fly a little bit in the face of both labor demand, what they are saying they are expecting to hire, and their own professed ability to find labor. So if labor demand continues, which we hope, and labor availability doesn't get significantly better, it's unclear to me necessarily how wages would fall significantly. It's very possible. I just thought it was kind of one of those things that I thought I would share with the audience. Over time, what we've seen is very steady increase in the number or the share of businesses that are raising wages, and we're seeing an increase in the share of business that are raising wages by a significant amount. So the dark green bars got consistently higher. They've leveled off from the May to August. So maybe, and overall in the general distribution here, we are seeing that wages may have leveled off in terms of their increase, but they are still very high. And in terms of some of the subcategories, food, drink, and accommodation are seeing stronger wage growth in general than the other categories. Probably not surprising in the sense that those are also the categories that are seeing the best recovery. So other challenges, prices, obviously, everyone's very familiar that we're seeing high inflation right now. In terms of wholesale costs, they are still very high. You're seeing, roughly pretty close to 40% that have seen a 10% increase in vendor prices year over year. The 70% also said, now this is a separate question that I don't have in this PowerPoint, but 70% also said that they felt inflation pressure was continuing to get worse. I'm not necessarily sure. I don't want to say that's not happening. I'm going to show you another chart that maybe gives a different view on that. The other thing that I would point out with this particular chart is that while wholesale prices continue to be really high in terms of inflation, the retail prices that the respondents are actually charging to their customers is fairly significantly lower. So they are trying to continue to eat as much of that cost as they can, because I think they're nervous, obviously. They don't want to lose customers, so they're trying to absorb as much of that cost increase as they can. So I mentioned that in terms of retail price changes over the past 12 months, we are seeing, some small evidence that maybe inflation has peaked. You're seeing just a small pullback here from the May to August surveys. What I would say is take this with a grain of salt. It's really hard to know at this point whether or not it's more, if it's a really good signal or if it's more just noise, because again, between surveys, you can see some fluctuations between from one to one and a larger pattern. So we don't know whether or not prices are really actually declining, but right now it's better than seeing it go the other way right now. Supply chain, real quickly on this, it's been an issue for some time. It seems to me that there is some evidence that it is improving slowly. That it is still a problem, still a significant, fairly significant problem for 1 out of 5 respondents out there, but it does seem to be modestly improving over time. Hopefully, it'll start to improve more quickly than that, but again, it's at least trending in the right direction. So I have 4 or 5 charts left, and then we'll get to the Q&A portion. But we just kind of want to give a little bit broader view, kind of open the lens a little bit for some financial health and outlook. So we asked them, we asked firms, and I've kind of referenced this already, when do you expect revenues to return to pre-pandemic levels? It's not great news to say that fewer than half are at or above pre-pandemic revenue levels. That's and by the second half of 2022, we'll reach that more than half threshold. But it is going to require a pretty strong 2023, I think, for us to move that fairly significantly over the next year or so. If you look at the different sectors, that same question, but with who's more at pre-pandemic levels. Again, attraction, entertainment. Suffering the most here in terms of the fewest, only about a quarter by the end of the year should be back to pre-pandemic levels. Whereas if you look at overnight accommodation, already over 50% by the end of the year, by the end of next year, almost 80% expect to be at or above pre-pandemic levels. If you look at it from a geographic standpoint, kind of what I mentioned earlier, the metro has been slower to recover overall. And so they, by the end of the year, and sorry, I changed the color scheme here, but it's same chart. Metro is still lagging in this. Central Minnesota, Lakes region, things like that are really doing much better than the metro in general. In terms of financial health, we ask, generally speaking, how do you rate your business's current financial health? So despite the fact that maybe your revenues aren't back to pre-pandemic levels, maybe maybe your business has changed in a certain way that your profit margins are good, or at least it's at acceptable levels. So, and what we hear from this particular question is that really 4 out of 5 respondents said their current financial health was growing or stable and positive. So I think that's also a good sign in terms of the overall health of the sector. Again, it's not everyone is in that same boat. We still are seeing about 20% that are in a negative financial position. Over time, what to me, that again, kind of the theme that I've been trying to promote here is that we are seeing, I think, some stability in this. Overall health has has improved really significantly since the throes of the pandemic, but it really seems to have plateaued. The one thing I would note on this, though, is this is probably always the case. So you never have a case where all firms are rising at the same point or growing. And so I think I don't see that this ever goes to 100% or even close to 100%, but hopefully we can see some marginal increases and improvements, especially in the growing area going forward. So then I think this is my last slide here. We also asked them about solvency in general. And that continues to improve. And that's despite what really has been a very volatile economy in general. And to me, I do a lot of outreach to business, and this kind of mirrors what I continue to hear and see in the economy. And that's that businesses really have become very, very resilient. So solvency, luckily and thankfully, we are seeing that continue to improve in the sector. And that's a really good sign for the sector, for the economy in general. So just a few final thoughts here, again, just to kind of reiterate, recovery continues. Accommodation has been doing the best, and those regions with really high natural amenities, lakes and stuff, I think have taken advantage of our interest in moving outdoors with a pandemic, etc., and are doing better. Less good, the recovery has been slow. I think we have to acknowledge that, and it's been lumpy for a lot of businesses and different subcategories. So those in attraction, entertainment, and businesses in the Twin Cities have seen a little bit different experience. With fewer that are back to, fewer than half that are back to pre-pandemic revenue, it's not a great sign, and it's in part because of all of these challenges: labor availability, inflation, supply chain, higher wages. It is a tough environment for businesses to perform in. But my last kind of overall sense is that financial health is stabilizing and improving slowly. And again, that resilience in this sector is really kind of remarkable, given all of the different challenges that businesses are facing right now. That is the end of my formal remarks. I appreciate your attention. I hope that was useful. I'm hoping as I go into the chat box that we're going to see some questions. But now I want to bring in our other panelists. Let me stop sharing here for a second. If I could get Ben and Gretchen on screen here. First, we have Gretchen Nussbaum. She's a research analyst with Explore Minnesota, which is the state's tourism office. And we have also Ben Wogsland, and he is the executive vice president for Hospitality Minnesota. He represents the organization represents the state's lodging, restaurant, and food service and resort and campground sectors. So first, thanks again to both of you for your partnership in this survey and for joining us today. Really interested in kind of your thoughts on some of the things that and again, maybe the audience should know too, we share a lot of information. So we all do our own analysis and we share our information. So we know that we're kind of triangulating kind of what we think is going on in this sector. So I guess if I can start with you, Gretchen, I'm curious if survey results generally are in line with kind of what you and what Explore Minnesota expected over the summer, and maybe whether there were any surprises, either good or bad, in some of the survey results.
Yeah, thanks, Ron. I think from previous surveys, we knew that there was a lot of unpredictability out there, the ongoing challenges with labor, inflation, and supply chain. So what we saw in kind of the lumpiness and uneven recovery continuing did meet expectations. And then also for Explore Minnesota tourism members who speak with people in the industry, we knew that even though there was an uptick in traffic, as we'd anticipate during the summer, those challenges were still weighing on people, especially as they consider how to continue to fill positions and deal with price increases. Looking at what surprised us, the question about customer demand is what I point to, that more than half of businesses said that they could handle more traffic. And seeing that during the summer wasn't, necessarily what we'd expect to have a percent that high. So as we really look into the fall season, it's still a great time to travel in Minnesota, wanting to encourage people to get out and go to those small businesses that really continue to need more support.
Mm-hmm. Ben, I'm curious, same question, anything to add on that?
Yeah, well, first of all, thank you, Ron. I want to say thanks to the Federal Reserve Bank of Minneapolis and Explore Minnesota Tourism, our partners, and also all of our members that participate in this survey and provide this critical real-time data. Really appreciate that. I think the big picture here for us is that the recovery is continuing and moving forward, but it's a fragile recovery and an uneven recovery, as you mentioned, Ron. The good news is clearly the resort and campground sector, with 80% or more of those operators this summer getting back to pre-pandemic revenues or even beating it. The tough news and the headwinds is that nearly half of restaurants are not back at pre-pandemic revenue, and a third of hotels are in that same position. So, when you think about an industry that even in normal times operates on razor thin margins, 2 to 5% average for a food service business, these are very real challenges to not be able to get back to normal revenue. And I think on top of that, seeing the inflation challenges, as you mentioned, and the workforce challenges, I think that poses for a very fragile economy as we move into the fall and into 2023.
Right. If we can talk a little bit about workforce just for a second. We've heard pretty consistently that employers in the sector have struggled to find workers. Total employment in this sector, I believe, is still below pre-pandemic levels, but it actually saw a pretty good surge over the summers. That's correct, right, Ben, Gretchen? If that's the case, I am curious what you're hearing from your contacts and members about how they are having more success, how they had more success over the summer. What kind of strategies are they pursuing in order to attract more labor in a really difficult environment?
Sure,
maybe Ben, let's start with you on this one.
Yeah, so to your point, Ron, we saw very good jobs growth for the first 6 months, 7 months of the year. That froze a little bit in August now. We are still down 22,000 workers in our industry from pre-pandemic levels. So when you look at the private workforce deficit from pre-pandemic levels, I think we make up like 60% of that as an industry. So it's pretty significant. And so I think that's consistent with what you're seeing in these operators saying, that labor is tight or very tight on historic levels. What we're hearing from operators is that they're getting as creative as possible to reach out to as many groups and different populations as possible to find workforce. They're raising wages. They're trying to offer flexibility in scheduling. They're trying to find new avenues to market to workers. And so those are some of the things that our members indicate that they're working on to try to find workers.
Okay, thank you, Ben. Gretchen, anything to add to that?
Yeah, so I would add to that Explore Minnesota discussions are beginning about ways our organization can help DMOs in the industry across the state increase awareness of the benefits of a career in hospitality. So hoping to really get that information out there, that more people are aware of, be it wage increases or flexibility, really highlighting what opportunities there are. So look for more of that to come in the coming months and into next year.
Okay, thanks, Gretchen. All right, I'm going to do this as a toss-up question. So Todd in our Q&A asked, so I think we're familiar, and for those that maybe aren't, they're in the sector, I think we've seen a fairly significant improvement in the leisure economy in terms of travel, business not so much. And Todd asks, what do you believe are the top factors preventing corporate travel from getting to 1990 levels in the metro? I'll toss that up, whoever wants to take that one first.
Well, I'll take that. I think, corporate travel from the beginning of the pandemic was predicted to be one of the slowest to come back. And I know, in Minneapolis and in St. Paul, I think there's a lot of optimism for some events that are coming on in the future here. I don't know how quickly that's going to get back, or how it will get back to those 1990 levels, to the question. But it certainly is one of the biggest challenges facing Minneapolis and the core central business district there, as we see, lodging occupancy rates are still 23 points off of historic norms for right now. So we certainly need corporate travel to come back and group business to come back if we're going to get back to a robust economy for that city, and that really impacts the region travel and the whole metro and the whole state.
Gretchen, anything to add to that?
Yeah, briefly adding on, it definitely is a national trend. It's not just unique to the Twin Cities, but across the country, there's that leg in group travel and business travel and conferences. It was nice this summer in the STR hotel report. You can see that Minneapolis, which is the greater metro area, compared to the other top 25 markets, performed well. And so, historically, Minneapolis had been having a tougher time than some of the other large metros, but we're seeing that it's catching up to the other areas, and hope to see that continue in the fall, and are confident that although it's slower, business travel and conventions will return.
So I'm gonna. There's a question in the chat that I'm gonna modify just a bit. So we've, along with convention centers, kind of maybe coming back a little bit more slowly. We do know that high amenity areas have seen really strong growth in general. I'm kind of curious how baked in the cake you think some of the current trends are. Like, do we think that this outdoor passion is something that's going to have legs for a very long time, or do we see, that's going to kind of peel back to what we were pre-pandemic? I'm curious what you both think might be kind of the long-term trends in some of both good and bad trends that we've seen so far.
Yeah, my guess will be it'll end up somewhere in between. In Explore Minnesota's monthly travel indicators, one of the pieces we look at is state park overnight reservations. And so those did initially go up in the years immediately of the pandemic. This year, they seem to be returning a little bit closer to what we'd expect pre-pandemic. So I think people are going to continue to have more of an interest in going outdoors. We're seeing our programs focused on hiking and outdoor rec, the passport programs to be really popular. A lot of visitors are checking in at different places. So expect that to continue, but also that people are ready to get back to some of the activities they did beforehand, going back to the theater, going to museums. And so I think it'll continue to be a nice mix.
Yeah, I concur with that. I think that, it may not be as high as the peak in the 2021 summer season that we saw for resorts and campgrounds, but I think it's going to stay stronger than pre-pandemic levels for getting out to the great outdoors and doing some of those things in Minnesota. So I think we're going to see over time stronger interest, but not at the same levels that we saw in 2021.
Thanks, Ben and Gretchen. So I'm curious, there's a question in the chat box about foot traffic, and I'm wondering if either of you are seeing any, if you could let audience members know, like how closely does foot traffic follow revenue? Are you seeing any changes, in actual out of pocket? So spending levels per person, per customer, or are we seeing them basically follow each other? Revenue and foot traffic pretty much follow each other all through the pandemic.
I think they are closely tied. I think they're pretty closely tied through the pandemic. I think that we saw some changes here as the summer wore on. I think early on in the summer, nationally, I think a lot of watchers noted that there was still strong customer demand for travel and for eating out, even though, there was inflation pressures on customers. I think in August and September, if you look at some of the national data, you can see that, I think Morning Consult had a survey out that showed 2/3 of Americans were changing their spending habits. And of those, 3/4 of them were traveling less or not traveling, and 90% were either eating out less or choosing not to eat out due to, their own cost concerns. So I think here at the end of the summer, we definitely saw some softening in that foot traffic that you're talking about.
Gretchen, anything to add on that?
Yeah, I'd add, in the survey comments, there were some interesting things people said about this. Points that are coming to mind, I think, are more choppiness. So businesses might have a couple really strong weeks, but then, for not any clear reason, that'll change. Or maybe their weekends will be really good, but during the week is still soft. And then I think too, just having revenue at maybe a historically expected level isn't necessarily enough, as there are more costs and other pressures. Really this environment's tougher than what businesses have had to work through in the past. So yeah, I think it's just that idea of everything being uneven again and unpredictable.
Sure.
Ron, if I could add one more point on that too.
Please, Ben.
I thought Gretchen just made a great point, but I'd also note that, when you look at the inflation costs, with 77% of operators saying that their prices have gone up 5 to 10% or more over the past year, but only 43% say that they're passing on similar rate increases to their customers. It's something that we're watching very closely, because that is obviously not sustainable over time. And so that is potentially a gap between, foot traffic and revenue and what you're having there, because costs are going up and they're not being recouped through price increases. Right. And again, that's just not sustainable over time for thin margin businesses.
Right. So Heidi in the chat box is interested in hearing how BIPOC and women-owned businesses are faring. And I'm just going to tee that question up a little bit by we do ask respondents to identify whether or not they are a BIPOC or women-owned business. The problem is we're not getting a big sample, so it would be very difficult for me to generalize what the survey is compared to. But I'm curious whether either of our panelists have some insights from maybe what you hear from those two ownership groups on how they are faring during the pandemic, and then I'll wrap it up because I do have some insights from some of our other survey work that might help answer that question too. Gretchen, would you maybe want to start on that?
No, Ron, I think you're exactly right in that our sample for those groups isn't really large enough to dive too deep. I saw that question come through while you were presenting, so it was looking at the actual survey results. we do have more women-owned respondents. We had about 100. At a very high level, looking at questions, about revenue, about financial health. I could say there is the trend of minority businesses were performing a little bit better than maybe the average, and women businesses maybe a little bit worse or very similar to the others. I think that it's something very important, and maybe in future surveys we can dig into that more to see what might be going on.
Ben, anything to offer on that?
With the caveat, as you mentioned, that we'd like a larger N on that as we're looking at the data, looking at both, businesses that say that they're growing or stable, the numbers look pretty similar to the total population. Same thing with, percentage of businesses that got back to 2019 revenue or beat it. I think we saw, between women-owned and minority-owned businesses, that number's at 62%. So a couple points off the 65% of the total group, but close. So I think, with what we've got in terms of the data, it looks to be on par with the total population.
Right.
Today.
And the thing that I would probably add to that is, I think probably if we were to splice the data a little bit more closely, their performance probably reflects where they're located, because again, if they are in the metro, chances are they were performing just as that metro group performed a little bit worse. They have a larger recovery to have. That probably is going to influence their overall performance, as well as whatever sector they happen to be in. So if you were in accommodation as a BIPOC owner, chances are you were doing better than a BIPOC owner of an attraction, especially in the Twin Cities. So some of those factors I think are also in play. So I appreciate everyone's insight on that. So I think we have time for about one, maybe two questions, depending on how talkative you are. So let me talk about the inflation thing and Fed's recent moves. I think everyone's familiar. The Fed has been raising interest rates, did so this week as well. And I'm wondering if we don't specifically ask that question here. I didn't present results on it. I'm just curious what you can tell from either the comments of the surveys, your contact with members since then, the moves that the higher interest rate environment that we're looking at, are you hearing or feeling like this is a small, medium, or large impact right now on businesses out there?
I can draw from, I think, from the comments, taking it from a little bit maybe of a different angle than what you're directly asking.
Sure.
Businesses were relaying that they are seeing people are spending differently. And so there is, I think, as inflation's increasing, more people are constraining, the amount they're spending on a trip. So maybe they're going to a resort, but they're not getting the meal package that they previously would have. Or instead of, having a restaurant being able to focus on formal dining, they're having to look more at casual dining or food trucks. So I think we are seeing that spending habits are changing by the visitor, and that really making businesses think about how they're going to best serve them and continue to get that revenue and traffic that they're looking for.
Right. Thanks, Gretchen. Ben, I think I'm going to give you the last word on this.
I'm not hearing a lot of chatter out there on that, Ron. I think, we've got the survey results on the question that was asked about the interest rate increases. And I think maybe a third of businesses said that that they had maybe had some impact, negative impact on them, but many not, answering that it had little or no impact or weren't sure. But no, I'm not hearing a ton of chatter out there yet on that.
Okay, great. Thank you, Gretchen. Thank you, Ben, for a great Q&A session. That's the last question we're going to take today. We really appreciate everyone joining us today for this webinar. Please remember to fill out the brief survey that's going to pop up in your Zoom window when you exit. For those that are interested, like this format, like some of the Minneapolis Fed's content, we are going to have a food and agricultural webinar on Friday, October 7th. This is a joint webinar with the Kansas City Fed, and it really has a great lineup. And I believe we should have dropped a link. Yep, there it is. So we have a link in the chat box that hopefully everyone can see. You can click that and register. Otherwise, we will also be following up with everyone via email to give them this particular slide deck, as well as a link to this webinar and links to other content, both from Hospitality Minnesota and Explore Minnesota. That concludes our webinar today. Thanks for attending. Thanks again to Ben and Gretchen. Everyone have a nice day. Thanks much.